Hi, everyone, and thanks for joining us on this masterclass with Ledn and Bitcoin borrowing. I'm Bijan Malecki, and I'm joined by Ledn co-founder and chief strategy officer Mauricio Di Bartolomeo, fresh off his interview last month with Raoul on Raoul the Journeyman. So definitely check that out if you haven't done so already. It was an absolutely fantastic interview. Mauricio, thanks for joining us. How are you doing today?
I'm doing great, Bijan. Lovely to be here, and just being. It's been an incredible few months and weeks in the markets for Ledn in particular, and for the markets in general. So it's a great time to be having this chat. Lots of people finding out about Bitcoin-backed loans, asking questions about it. So this would be a great. I thought this would be a great opportunity to deep dive into that.
Yeah, absolutely. Our members have been talking about this for quite some time, so I think it's a great place to start. Great time to have this conversation. But before we dive into let in and Bitcoin borrowing, we always like to ask everyone about their background and how they got into this crazy world of Web3. So why don't you tell us a little bit about yourself and your journey?
Yes, definitely. So I went through a lot of this on the recent interview with Ralph. For anyone that wants to deep dive into the actual story, but I'm originally from Venezuela. That's where I was born and raised. My family, or a large part of my family, is still there. But that is where my family found Bitcoin in the middle of hyperinflation, capital controls, a big migration crisis. My youngest brother didn't want to leave the country. My parents wanted all of us to leave the country, but he refused. And as part of his efforts to stay in the country, looking for businesses or things that he could do that would actually generate some type of positive income, because in Venezuela, with hyperinflation, it was very hard to make any money and get ahead. But through this, through his desire of basically starting something in the country and staying, he, through a friend, found out about the opportunity to mine Bitcoin, and he shared the white paper with me and my dad. We kind of reviewed it. It didn't really click at the time, but I knew that it needed energy, which was very cheap in Venezuela, and it would give you this output that was Bitcoin that you could sell anywhere. So my family starts mining Bitcoin, and against all odds, finds a light in the middle of a country that's falling apart. And so my brother was beaming, my family was beaming. Very, very quickly after that, a lot of my uncles and cousins start mining. Then my friends start mining, and it created this massive sort of Bitcoin revolution. When I saw what Bitcoin was doing for people in Venezuela, that's when it clicked that people eventually were going to need this, regardless of where they were, because the sort of fate of the fiat system is that inevitably it gets abused and printed into oblivion, and then you end up needing to find an exit or a solution, an asset that actually can hold its value. So that was how I got into Bitcoin, how my family got into Bitcoin. After we built a bunch of mines, and I went on to build mines in Canada and the US, every mine that we used to help or we built or we assisted with had the same issues, which is nobody wanted to sell their Bitcoin, but everybody wanted to grow the mine and pay their expenses. And we went around looking for people that would give us a loan. We said, well, in Venezuela, it was natural that people wouldn't offer that to you because Venezuelan financial services sucked. But when I came to Canada, my business partner and I, Adam, we started trying to find an option to borrow against our Bitcoin. And when we couldn't see them, or the ones that existed had all these other tokens and bells and whistles that made no sense, we decided to solve our own problem and build a company that would effectively give you a dollar loan and take your Bitcoin as collateral. And that's the genesis of Ledn. So we started the business in 2018. We did Canada's first Bitcoin-backed loan in November 2018. And then fast forward to today, this is, we're here sitting chatting with you.
Lovely. This is why we always ask everyone's background, because you get fascinating stories like that just kind of make us understand what crypto is all about. So really appreciate you giving us some insight into how you came into this world. So you touched on this a little bit on how Ledn came to be. Can you kind of talk us through that process of your origin story? We know when it clicked, you were having difficulty getting these loans, so you decided to solve your own problem. But what does that process look like?
Yeah, so the idea of borrowing against the Bitcoin came from a few places. The first one, or one of my initial inspirations, or our original inspirations, was the fact that in Venezuela, when the currency was getting inflated away into oblivion and debased, um, you could effectively protect yourself, or you could use the inflation of the system itself for your benefit. So you could basically put a mirror on their irresponsibility and overspending and printing by basically shorting the local currency. So in Venezuela, what myself and others did was you would go to the bank who still had a mandate to lend you cash or lend you bolivares, so the local currency. And those loans they were putting out at around 24%. So you could borrow bolivares at 24% from the bank. But we all knew that inflation was running at thousands, millions percent. So what you did is you would borrow the bolivar, you would buy a dollar, because back then we didn't have Bitcoin, but the dollars weren't getting printed as fast as the bolivares. So basically you borrow the bolivares, you bought the dollars, and you let the bolivar get hyperinflated away. Your debt in real terms or in dollar terms would basically dwindle down into pennies. And after the time passed and your debt came due, you would sell a fraction of the original dollars you bought to repay the bolivar debt. And then just rinse, repeat, rinse, repeat. And so what you're doing is you're effectively borrowing a fiat currency that's getting printed into oblivion, and you're using that to buy an asset that has a stronger stock to flow, an asset that isn't getting printed at the same velocity. Not too dissimilar to what Americans do when you get a mortgage, right? Like you're taking a big dollar loan on a currency that is basically becoming weaker over time, and you're buying a property with it that it preserves its value. So it's this virtuous cycle that it creates because you're long the hard asset and you're short the weak asset. And when we saw the opportunity to lend against Bitcoin, it made a lot of the original issues with debt go away. The number one being the verifiability of the collateral, because with Bitcoin, you can check where the Bitcoin is through the blockchain. And the other piece is that Bitcoin is, what got us really excited is that Bitcoin is a uniform asset. Your Bitcoin in the US is the same as a Bitcoin in Colombia. It's the same as a Bitcoin in Venezuela and Spain. So if we could solve this issue, or we could issue this loan in Canada, we could potentially take it to the world and underwrite them in the same way. And so we got very excited about the potential. And when we looked around and went to banks and financial institutions and asked about Bitcoin as collateral for a loan, everybody told us we were crazy. Who would do that? In fact, the most common answer was, that's not an asset. And when they told us this, like the fourth time, Adam and I just looked at each other and said, this is our opportunity. These guys are sleeping at the wheel on this massive potential market. And so we did our, we threw our hat in the ring and we said, we're going to try to solve our own problem. We built Canada's first Bitcoin-backed loan. A lot of those loans went out to our to our friends in the industry, people that were miners that we knew from the past. And then it snowballed because people used them and benefited from them. If you look back at the price trajectory, anyone that's used a Bitcoin-backed loan responsibly over the last 7 years has gone out ahead. And so the people keep coming back to this because it works for them. It makes financial sense. So that's a bit of the genesis on how the lending, and Ledn origins came from.
Absolutely love to hear all of that. So, you know what? I think let's just get right into it, because I know this is absolutely a topic that a lot of people have been interested in for quite some time. We've been accumulating Bitcoin, we've been holding it like we're supposed to, but what types of financial services can you actually access with your Bitcoin?
Yeah, so there's a few financial services that you can access with Bitcoin, and you've broadly seen a lot of these services proliferate with each one of the rallies that we've seen in the market. So when Bitcoin first came out, broadly speaking, what you can do with Bitcoin is you can buy it and sell it, you can store it, or you can use it to access financial services like lending it for yield or using it as collateral for a loan. So those broadly speaking are the main use cases that you have for Bitcoin as a financial instrument. And when Bitcoin first came out, hardware wallets didn't exist. You would have to store your Bitcoin on your computer and your Bitcoin core. Then along came the mobile apps and then the actual hardware wallets. At the early days, there wasn't really a place or a big places where you could exchange them. There were P2P markets. Then Mt. Gox came up. Then Kraken and Coinbase came up. And so then you had the sort of an initial foundation of the Bitcoin sort of usability, which is making it easier to self-custody through these hardware wallets and making it easier to buy and sell through these exchanges. Then on the sort of third rally, or the rally that came after 2015, 2016, we saw the emergence of the lenders, right? And so these were the Ledns of the world, the BlockFis of the world, the Celsius of the world. And these products were very popular right up until some bad actors and outright fraud brought down a lot of the lenders and basically forced this reset in the industry that washed away all the weak players and those who weren't offering these services responsibly. So since then, we've seen a massive renaissance in lending, led really by the companies that did things right. And broadly speaking, I think the main financial products or instruments that people look for or use Bitcoin for are buying and selling it, holding it in custody, whether that's qualified custody at a place like BitGo, or you're holding it in your self-custody, or multi-sig custody with things like Casa. And then you can use it as collateral for a loan, or potentially in different companies will also offer you the service of earning interest on that Bitcoin. Basically the same things or similar things than what you can do with your actual dollars. But you also have the added benefit that Bitcoin is much better collateral than a dollar, and that you can use it to get dollar loans and keep it as collateral. So I would say those would be the things that, broadly speaking, you do with the Bitcoin.
Fantastic. And one thing you touched on earlier is that, in your kind of Ledn origin story, how, you were trying to get these loans and the banks were telling you that's not a real asset, right? Bitcoin is not a real asset to take a loan in against. So what exactly, and you did touch on this a bit in your previous answer, but what exactly is this Bitcoin backed loan, and how does this process work?
Yes, so it's a great question. The way a Bitcoin backed loan works is very similar to a home equity line of credit with a property. So what you're doing is you're coming to Ledn and you're telling us, hey guys, I have one Bitcoin. I would like to get a dollar loan against this Bitcoin. So you would pledge one Bitcoin as collateral. Let's assume it's worth roughly $100,000. And Ledn can then lend you up to $50,000. So we will issue you the dollar loan, and you will pledge your Bitcoin as collateral for a loan. In the custodied model, which is our flagship loan, people place Bitcoin with us in custody, and the Bitcoin literally remains in custody until or while the loan is open. When the client repays the loan and the interest that it's accrued, the client gets their Bitcoin back. So effectively, you are using your Bitcoin to guarantee or collateralize a dollar loan that we're going to be issuing to you. And there are several benefits to that, but we can get into the sort of financial benefits. At a base level, you're putting your Bitcoin as collateral or guarantee to receive a dollar loan. And at Ledn, you don't have to pay monthly interest expenses or monthly amortization for your principal. All of the fees and interest accrues on the loan until you decide to repay it, which you can do at any time with no penalty. And you can also renew the loan at the end of the term or keep it going if your loan to value ratio is healthy. And importantly, what is a loan to value ratio? The loan to value ratio is the proportion of the dollars you borrowed relative to the value of your collateral. It's important to note that these loans don't go on your credit history or your credit records. The only guarantee or security that Ledn and others take when you issue this loan is the collateral itself that we're holding. Therefore, we have to closely monitor the market value of that collateral, because if the collateral value drops and gets close to the dollar amount we lent to you, we do have to liquidate the Bitcoin to close the loan. We cannot allow the value of the guarantee to go below the dollars we lent to you. So as a potential borrower, one of the main things you need to look out for or plan around is this idea that Bitcoin price can get volatile. You may be asked to send more Bitcoin to service or keep the loan at a healthy status. And if you plan around that, you can also redeem excess collateral if the price goes in your favor. So if Bitcoin rises, in the same way we ask you to top up more Bitcoin if the price goes down, you also have the option to basically withdraw excess collateral from the loan as Bitcoin rises. So you want to be, when you're planning and considering these products, you want to make sure you're thinking through What happens if the price goes up? What happens if the price goes down? Do I have enough of a buffer, of a cushion to protect myself and reach the outcome that I want?
Fantastic. So, you touched on this, and I definitely think it's important to kind of dive into this because, for a lot of people that have just been accumulating Bitcoin and just holding it, it might seem a little bit scary to kind of put their Bitcoin up for collateral. So, can you tell us like why does a Bitcoin back loan or Bitcoin borrowing, why does that make financial sense?
Yeah, it's a great question. So there's a few reasons why it makes financial sense, or the two main benefits from people, or that people mention or reference when taking one of these loans, is number one, it's it can be very beneficial for you from a tax perspective. So when you're taking out a loan against your Bitcoin, it's typically not a taxable event, meaning you're not selling the Bitcoin, you're just using it as collateral for a loan. If you instead had gone out and sold the Bitcoin to get that amount, there would be a potentially triggered a taxable event whereby you sold the Bitcoin. Say you sold it at 100K. You bought that Bitcoin, depending on the cost basis you have for the Bitcoin. Right now, we're at all-time high. So most people are sitting at an implied profit on that position. So if you bought Bitcoin at 50K and you're selling it at 100, you're going to pay capital gains on all the gains between 50 and 100 that you had on that Bitcoin. And then, so the number one reason would be tax planning. For a lot of people, it makes a lot more sense to borrow against your Bitcoin and to effectively let the Bitcoin, maintain the ownership of the Bitcoin, and not have to go and trigger a taxable event and go pay taxes potentially. The second benefit is that by using your Bitcoin as collateral for a loan, you still keep all the upside of the collateral. If Bitcoin goes from 100 to 200, that's still your Bitcoin. So you have that gain has accrued to you. You will owe Ledn the same 50K, but your collateral value will go from 100 to 200. So the amount you owe relative to the value of your collateral goes down over time as Bitcoin appreciates. And to put these things into some numbers or some context, our loans go out starting from 12.4% up to 13.9%. So that will be the interest rate that you would pay to hold one of these loans for 1 year. If you look at our clients, just to give you some data, last year our clients made 8 times more money on average on the collateral appreciation than what they paid in interest. And to give you another interesting data point, as Bitcoin price rises, our client loans become over collateralized. There's more value in the collateral than the loan requires. So we allow clients to redeem excess collateral back into their self-custody or use them for another loan or whatever it is that they want to use. So we had over 1,000 Bitcoin go back to our clients in self-custody from loan collateral just last year alone. So it makes financial sense because Bitcoin is appreciating at a much faster pace on average than what you're paying to hold the loan. And the other one is that you keep the upside of the asset itself. And then the one other piece I'll add is that if you structure it in the right way, the interest that you pay on these loans may even be deductible from your revenues, and so or your investment income. So there are many potential benefits from a tax planning perspective, and also from keeping the upside of the asset itself.
I love to hear that. As someone who often hears Raul talk about taking lifestyle chips, but not wanting to sell my Bitcoin, this is definitely something that piques my interest for sure. So I want to talk about your process and how you at Ledn do Bitcoin back loans and how that whole process works. Like, how does someone like me, or like any one of our members out there, how do we go about getting a Bitcoin back loan on your platform?
Yeah, it's a very simple process. So you will come into Ledn.io. If you don't have an account, you'll create an account. Ledn is a fully regulated business, so we do have to do KYC on our clients, or KYB if you have a corporate account. Once you come into the platform, you create an account, you pass KYC, you will see the option to submit a loan application on your dashboard, and you can basically input the amount that you want to borrow, the destination where you want it, if you want it in stable coins or if you want it in a bank account or your local bank account. The loans are denominated in US dollars, but we can disperse them in US dollars, stable coins, or your local currency. The loans go out at 50% of the value of the collateral you pledge. So if you want to borrow $1,000, you need to put $2,000 worth of Bitcoin. Submitting the loan application process takes all of 2 minutes. If you have the information on hand of what you want to do, the loan is typically approved within a few hours of your application being submitted. And then once the loan is approved, you will be assigned a Bitcoin address for you to send or transfer the collateral. Once you transfer the Bitcoin collateral into the loan address, the loan typically gets funded within a few hours as well. And if you go look at our reviews, some people still get amazed at how fast the whole thing is and can happen. But that's because Bitcoin allows for that. It's a 24/7, never off type of operation, and so is Ledn. So if you go and apply for a loan over the weekend or on a Sunday, you will notice that our response time and the turnaround time for a Ledn loan is miles ahead of that of a traditional financial institution, because we're built for a 24/7 market and an asset that never sleeps. So that's the process. It takes basically 2 minutes to open an account and pass KYC, and another 2 minutes to apply for a loan. And typically, you can get, you will be out and running with the proceeds of the loan within 24 hours.
That's very quick process. So what have you seen, or like what are some interesting or standout things that you've seen that people are actually, using their Bitcoin borrowing for? That's something that fascinates me. I'm always wondering if it's playing out exactly like it is in Web 2, or we're seeing something a little more unique play out in Web 3. Would love to hear your take on that.
Yeah, it's a great question. And the use cases and frankly, the size of these loans has evolved over time. When we first started the business, the typical borrowers would be people that were running mining operations or Bitcoin businesses. We even had a bunch of developers that worked for Bitcoin companies that got paid in Bitcoin and they didn't want to sell it. So they would come to us for their monthly expenses. So we had guys that would borrow, 10K every month to pay for rent and living expenses. We had miners or Bitcoin businesses that would borrow 50 to 100K every so often to either expand the business or bridge, another incoming payment. That was sort of a common use case. So in the early days, it was a lot of the Bitcoin native industry, a lot of people that were working in the space, that were very familiar with the space, very OG type of client base, people that got Bitcoin and got in very early on. As the popularity of Bitcoin has increased, as the people who hold Bitcoin have become more and more diverse, we've started to see a bit of nuance in the use cases and the type of clients. So in Latin America, we see a lot of loans get taken to start businesses, to grow Bitcoin mines. So a lot of the loans that are going out to the emerging world are basically powering entrepreneurs that are starting new businesses. In North America, or the sort of OECD markets, parts of Europe and North America, what we have seen is a big trend recently of people using their Bitcoin to either diversify into other digital assets or real estate. And one of the big ones we're seeing right now is Bitcoiners borrowing against their Bitcoin to make down payments for property, to close on properties, to buy homes. And so these are typically larger size loans, but they are becoming more and more common, more and more frequent. And I think that's also a product of where the original Bitcoiners are as a generation. A lot of the guys that got into the space, 15 years ago, they're now, their families are growing, they're having 2 and 3 kids, they're married, they need a bigger place. Or they want to use some of that wealth that they've seen grow over time, into the millions, and translate that digital wealth into your real world experience. A lot of Bitcoiners have had the sour taste in your mouths, and I include myself in that boat, where we'll go to a bank and we will ask for financial services, and they will tell us that we don't qualify for any of that stuff. And then we'll ask, why can't I access your credit card? Why can't I access your mortgage? Well, and then they'll say, well, because you have no assets. And then we'll say, but what about these things that are sitting here that's worth millions of dollars? That is an asset on anyone's eyes. And they'll say, not to us. We don't consider those. Therefore, we cannot service you. So if you're a Bitcoiner that has, significant wealth built up on this asset, and you're getting shunned away from what you consider traditional financial entities, you're not just going to sit there and not improve your lifestyle or not basically give you the things that you work so hard for, like buying that new house, like buying a car, like moving. We're actually servicing a lot of clients that have been relocating from whatever parts of the world to places like El Salvador. So when they land in El Salvador, they need to build a new home, they need to buy a car. That's the kind of things that they use Ledn for. I've spoken with many clients that literally took our loans to build their house in El Salvador or to buy their car in El Salvador. So there's a plethora of use cases, but I would say the biggest ones that are trending right now would be property purchases in places like North America, the United States, and then a lot of them are using their digital wealth to start new businesses or grow existing businesses.
That's just absolutely fascinating. It's just crazy to just see where you guys started and being told that this is not a real asset to borrow against, to seeing people borrowing against it and building homes that they will live in. Like what a journey this has been. And it's in relatively such a short amount of time, all things considered, even though, we say, 7 years is like 30 years in the crypto world. But we're starting to see this kind of pick up more steam as the crypto markets mature, and a lot of big players are starting to kind of expand their product services and offerings. So what makes Ledn unique in this space?
It's a great question, and it's not a short answer. But Ledn does a lot of things differently than the previous iterations of lending companies, and frankly, differently than what you're probably going to see from a lot of newcomers to the space, because we see this every time. Whenever the market rallies, people get dollar signs in their eyes, they see products, they think it's easy, they're like, oh, we're going to launch a product that goes and competes because look at how well these guys are doing. And so you are starting to see a bunch of these pop up. Now, as Bitcoiners and people watching this that have been in this space for a few years will know, not all loans are created equal. There are risks that you need to consider when you're interacting with these platforms. We actually refinance a lot of the Celsius clients out of bankruptcy. And a lot of our clients, had accounts at places like BlockFi and Celsius, and they lost money in those accounts. Never did they have any issues at Ledn. But if they didn't diligence the right counterparty, or if they didn't ask the right questions, they unfortunately, suffered from not having done that type of diligence. So at Ledn, we do a lot of things differently. Number one is we've never had a token. So a lot of the guys that fell through, if you remember, had a token, and a token allows you to basically do all sorts of financial shenanigans and engineering. And that was definitely happening in some of the previous lenders that are no longer here. The second one is focus. At Ledn, we've only supported Bitcoin and most recently Ethereum as assets. These are assets with deep liquidity. They've stood the test of time. We've done cycles around COVID, around the collapse of Three Arrows, around the collapse of Genesis and Alameda and all these other companies. And at the time where you have to, and when you're forced to as a lender to have to liquidate, which is not the funnest part of the job, but it's part that keeps the financial integrity of the business, Bitcoin will always have a buyer on the other side. And you will always be able to get out of that position. And it has been time tested. There are other companies that were taking things like Shiba Inu or other types of tokens as collateral. When you're trying to liquidate a large position in those assets at 2 a.m. on a Sunday, there may not be someone on the other side. And if you're not able to get out of that position, that means you're basically risking the integrity of the entire business. So at Ledn, focus has always been a big part of our DNA. And transparency. We were the first lender to ever do proof of reserves attestations with a certified public accountant. We were doing those in 2021 when everybody was adding DeFi tokens and calling us the boring Canadians. But we stuck to our guns, which was to add transparency, because our view was that if we don't add proof of reserves as part of your core foundation when you're building the business, you cannot add proof of reserves retroactively once you've added 1,000 products and 100 assets. And at Ledn, we built it into the foundation of our business. We still do them today. Everything we build and everything we do is compatible with our proof of reserves. And not only do we do proof of reserves, which, by the way, consider our assets and our liabilities that are verifiable by the client. This is the only type of proof of reserve structure of its kind in this industry. But we don't just do that. We also do the open book report, which we publish every month. It tells our clients how we're using assets to power the services that we offer. So those two things, the fact that we're regulated, the fact that we work with banks as our primary funding partners, we don't use decentralized finance on the back to power our services. We'll get into, what types of platforms are there and what are the risks that you should be watching out for when you're considering these platforms. But at Ledn, our focus has been transparency, client control, and focus on simplicity. It's a very easy business to explain. And by keeping it simple, we can do it better and do it faster. Our view, or one of our favorite sayings, is that the best restaurants have the smallest menus, because our focus and our duty is to do a few things, but to do them better than anyone else. And that's what we do with Bitcoin-backed loans.
Oh, I love that's a great analogy with the restaurant. I often say that too. So I love to hear that. And um, I want to kind of, you touched on the risks and what people should be considering, because I think people are rightfully becoming more cautious with their crypto. Especially with the Celsiuses and the FTXs of the world. We have a lot of reason to be cautious. So what are these risks that we should consider when borrowing from a platform, and what questions should we be asking ourselves of these specific platforms that we're considering borrowing from?
Yeah, it's a great question, and it's a bit of a long answer because there is quite a bit of nuance when it comes to Bitcoin-backed loans. On the surface, they all look similar, and it's easy for you to get carried away and think that a loan from this group is the same as a loan from this group. And one of the most poisonous things that happened in the last cycle is that you had these ranking sites that would basically put different loans or different yield products stacked on top of each other, and all that would show you was the rate. And basically it created this sensation that all of these were equivalent, and that the only real distinction was the rate that you were paying. And nothing could be further from the truth, unfortunately. So the first thing you want to check is whether it's a centralized platform or a decentralized smart contract protocol, because the sets of risks are wildly different between the two. Briefly, I won't spend too much time on decentralized finance protocols, because I believe most of the people watching this will probably be more geared towards a centralized service offering. But you can, potentially access similar services through some of these decentralized finance protocols. The challenge with using Bitcoin for this is that Bitcoin is not a native smart contract chain or asset. And so in order for you to be able to use your Bitcoin in some of these protocols, you have to wrap the Bitcoin, or basically exchange that Bitcoin for an IOU of that same Bitcoin that's wrapped on this new blockchain that can interact with these contracts. So the risk number one you're taking is by wrapping the Bitcoin. By wrapping the Bitcoin, what you're doing is you're giving that Bitcoin to someone else, and they're giving you an IOU. So number one, that wrapping event could be a taxable event. So off the gate, you could be potentially negating one of the main benefits of a Bitcoin-backed loan by wrapping it. And then the second one is you're going to have protocol risk, which whoever protocol you choose to face. And some protocols have done okay over time, but we've also seen the sort of collapse of things like Terra and Luna. We just saw the Torchain lending protocol that used to let you apparently use native Bitcoin to get a loan. That went insolvent. So it's decentralized services have a completely different set of risks if you're planning to use those. So, but I believe most people listening to this will most likely be interested in dealing with a centralized group. So a centralized service provider would be something like Ledn. It's a company that's regulated, that has a headquarter, that has people, that has staff that you can email and ask questions to. You'll have a legal agreement. You'll get a tax statement or the information you need to file your taxes. So it's it very much looks and feels like other financial instruments or institutions that you've interfaced with in the past. Now, those have also, there's always risk when you're considering any loan. So there are risks that you need to consider when you're diligencing a centralized entity. The number one that I would look at right now would be, how long have they been doing this for, and what do other people have to say about it? Because the Hive, or the Bitcoin community, has been around for everything that we have seen. They've been through the ups and the downs and the disasters and the success stories that we've seen. And through that, they have learned. And those lessons are typically uh, immortalized in the reviews of companies and in the sort of testimonials that people that have interfaced with these companies have. So the first thing I would look at is, how long have they been in the business? And what are other people that have used the service saying about working with them? So that one I would think is an important one. The second one is, do they have proof of reserves? Do they have a mechanism through which you can get comfort around how they're running the business? So something like proof of reserves would be a good thing to look for. Any tool that allows you to verify or gives you more transparency into the business operations. The other one would be, do they have a token? If so, typically that's a red flag. And then the second one is, how many assets do they support and how many services do they offer? Because every time you add a new asset, you increase the complexity of the business in the multiples. And every time you add a new product that then has to be compatible with all those assets, you do the same thing. So you're basically exponentially adding complexity to the business. And simpler businesses tend to run more efficiently and tend to be easier to do things like proof of reserves. So it all kind of, simplicity is a very elegant thing. And when it comes to storing your money and offering you financial services, boring is not always bad. We saw what happened when you see companies, growing at speeds that look too good to be true, and sponsoring stadiums and doing the crazy big ticket things. That money could be much better spent in improving your risk management. So at Ledn, we encourage everybody to look at our reviews, to ask the right questions, because one of the things I love saying is, if you do your homework and if you ask the same questions to everything or everyone that you're considering, 9 out of 10 clients end up at Ledn. So I very much encourage people to do their homework, and don't take it from me. I'm one of the co-founders. So go read our reviews, go ask other people how their experience has been with Ledn, and then make your decision.
Yeah, I think that was an important differentiation you made there as well about, kind of the questions that you should be asking, because we often get excited about, tokens, right? And earning that token or getting rewarded in that token. We kind of see it almost as free money. And then if we see these platforms kind of really expanding their services, we can kind of get lost in what that means. So I think it's very important to kind of mention those can actually be red flags, right? And I think there is something in that simplicity. There's a saying that, I used to say in my old world, keep it simple, stupid. And I love that simplicity is it, because in this world of crypto that's so complicated, you find comfort in that simplicity. So really appreciate you saying that. So I want to talk about what happens after you get the loan. So I went in there, I get the loan, right? And I want to actually tie this question in from Guilty on YouTube, because he has a similar question to myself. But like, what happens when you don't pay back the loan? I got the loan, but what happens if I don't pay it back? Who keeps that Bitcoin? Like, where does it go? Just, can you explain to us what happens there?
Definitely. So when you take a loan, let's just say you came today and you borrowed $1,000 and you put $2,000 worth of Bitcoin collateral. You keep the loan open until the end of the term. And let's say that a year from now, February 12th, 2026, you say, Mao, I don't have the $1,000 to repay. Well, you have a few options. Number one is, remember, we have $2,000 worth of your original Bitcoin collateral. So you can choose to repay the loan by selling part of that Bitcoin to settle the debt. So what would happen in that case is, we would take whatever amount you owe times the Bitcoin price. So if Bitcoin, call it, is still at 100K and you owe us $1,100, we would take $1,100 worth of your collateral, settle the debt, and whatever Bitcoin is left would get sent back to you, to your transaction account, where you can take it out into self-custody or do whatever you want with it. The other option is, you can choose to roll the loan into a new term. So if your loan to value at the end of the term is still below 60%, so in a healthy status as we would consider, then the default setting is that the loan automatically renews into a new 12-month term. So in theory, you don't have an obligation to repay right away at maturity. You can choose to roll the loan into a new term, or you can opt to repay it if you wish to do so. But if the loan is in a healthy status or a healthy LTV, it can roll into a new term. And as an example, I have clients that have rolled their loans for 4 years, 5 years, and kept them open. And they took the loan when the original value of their Bitcoin collateral was, 15K, and now it's 100. So now they just let the debt roll and roll, and they've scooped off a significant amount of excess collateral from it. So yeah, because again, we have 2-to-1 collateral securing the loan, the sort of potential options would be we settle the debt from the collateral you've already had with us, or you can continue to get a new term or roll the debt into new terms to give yourself more time to potentially pay it back and get back the Bitcoin.
Lovely. And how is the Bitcoin custodied?
So in our custody model, we work with our primary funding partners for our loans are banks. So in our custody loan, the loan would either be funded from Ledn, our own treasury, or our own deposits. If that's the case, the Bitcoin would be held at BitGo Qualified Custody, who's our primary custodian. And if your loan liquidity is being sourced from one of our banking partners, we then take the Bitcoin you're pledging to us, or the client is pledging to us. We pledge that Bitcoin as collateral to one of our banking partners in their qualified custody. And then we draw the funds to service your loan. When we repay the bank loan, we get the Bitcoin back. So in a short answer, your Bitcoin collateral would be sitting at BitGo Qualified Custody or at one of our banking partners' custody.
Love to hear that. And, we talked about kind of what happens if I don't pay back the loan. And, we've seen this with Celsius and FTX, but what happens if the one issuing the loan goes insolvent? What happens there to the person who loaned who received that Bitcoin borrowing?
Yeah. So in most cases, if you have when you're taking a loan, Bitcoin back loan, you're putting more Bitcoin collateral to this entity than the money you're receiving. So you're putting $2,000 worth of collateral, you're getting $1,000. So if the company that's issuing you the loan were to go under, meaning they wouldn't have the collateral, the full amount of the collateral to repay you or anyone else, the company itself would enter into an insolvency or a bankruptcy process, which is what ended up happening to BlockFi, to Celsius, and to a bunch of others. And this is why it's so important for you to diligence the company that you're selecting. So I'll give you another example of things that we do at Ledn that many people aren't necessarily aware of, which is that our products are ring-fenced technically and legally from each other. And what does that mean? That means that if there is a person depositing Bitcoin with us to earn yield, and we are issuing loans to an entity to generate that yield for that client. And then on the other side, we have somebody like you, Bijan, who came and took a custody loan with us. They wanted the Bitcoin to be sitting in custody and not have the risk of your Bitcoin being lent out into the market or anything else happening to that Bitcoin. If for whatever reason there was a loss in the growth account or in the yield vehicle that is being used by other clients to generate the yield, you, Bijan, the borrower that is paying for the custody loan, should not be impacted by that loss. So importantly, at Ledn, we do have a product that offers you the option to earn yield on that Bitcoin. But that product is ring-fenced both technically and legally from our custody loan operations, meaning that if there ever were to be an issue on this other side of the house, which is the yield operation, that impact would be contained to the people participating in that product. You, as a custody borrower, would not be impacted by this. And this was a big lesson that unfortunately had to be learned the hard way, because back at the Celsius bankruptcy, you had, as an example, you had guys that had Bitcoin with Celsius in what they called their custody account, which means they never even had a loan. They just had an asset that was supposedly being kept safely by Celsius. And then on the other side, you had people taking levered longs on Shiba Inu. And both of those people went on the same line for the insolvency and the bankruptcy process. In traditional finance, it doesn't work that way. Like if Fidelity or another ETF issuer has an ETF that has all the Bitcoin miners in this ETF, and one of the companies in that ETF goes bust, the ETF just reprices and nobody blames Fidelity for it. It's just a function of the instrument that you were in, and you all knew the risks going into the instrument. So Bitcoin lending is growing up, and it is incorporating a lot of the good things that have been learned through hundreds of years of traditional finances. So I actually consider this as a growing up moment or a maturation moment for this industry, because now clients discern enough to basically ask that question, right? And in the past, in the 2021 cycle, nobody asked that question. Everybody said, "Oh, Ledn's is X and Celsius is Y, so I'm going to go with Celsius because it's cheaper." It's very important for people to understand that there is such thing as a risk adjusted return, right? Like if you see a return or a cost somewhere, adjust it for risk. The headline number must be adjusted for your perception of whatever risk that is. So if you're looking at a loan that's cheaper than Ledn, but the company has tokens and it has, it's never done proof of reserves, it's been around for 2 days, adjust that rate. And if you see a rate from Ledn and you see all of our track record and all the things we've done, adjust that too. I won't tell you how, you'll reach the conclusion yourself, but you must appreciate and incorporate the intangibles of risk into the headline rates that you see to avoid problems or just to make sure you're making a sound decision.
Yeah, absolutely. Reminds me something you mentioned kind of when we were chatting offline. It's about time in the market, and you like to see someone or a company that has survived multiple bear markets, and they're still here, they're still working, they're still improving upon themselves and ready for the next one. So, love to hear that, Mauricio. It's been an absolute pleasure speaking with you and learning about Ledn and the world of Bitcoin borrowing. Where can we find out more about Ledn and learn more about you guys? You want to let us know where we can find you?
Definitely. So Ledn is ledn.io. That's our landing page or our home website. You can check us out there. On Twitter or X, we're at HODL with Ledn. And for me, if anybody wants to reach out, I'm at Cryptonomista, which is cryptonomist with an A at the end. And our team is always ready for any questions you have. And that's one of the beautiful things about not being a smart contract and being smart people, that we can actually answer your questions and guide you through anything you need. So don't be shy if you have anything you want to confirm with us or clarify.
Yeah, guys, definitely check them out and really dive more into this if you have the time. It's just absolutely fascinating. We've been talking about this for so long, so it's just great to see this starting to expand and mature. And Mauricio, I want to just throw it to you for any final thoughts that you'd like to share with us or key takeaways.
No, I think we've covered a lot of things. I think be diligent, be smart. There will be newcomers trying to seduce you to basically try their brand new offerings. I would encourage you to do your homework, do your research, make sure you're asking the right questions, make sure you're considering the risks and not just the rates. And if you ever want to talk about these types of products or have any questions, yeah, we're always happy to chat.
Lovely. Thank you, everyone. Thanks again for joining us. I hope you enjoyed this masterclass with Ledn. We'll see you for the next one.